My name is Anthony Lewis. I'm Director of Digital Assets for a blockchain company called R3, and our blockchain platform is called Corda, which the guys from SOV should definitely consider as the best blockchain to record the SOV on. One of the great things about working at R3 is I get to work with a lot of traditional companies, banks, etc. Those guys, we can call them traditionalists or incumbents. They really know how things work today. They really know the rules. I've been at R3 for 3 years, and before that I had the privilege of working for itBit, which is a cryptocurrency exchange. Call them the libertarians or the disruptors. What I really like about this year, previously they've kind of been at odds with each other. There's been a kind of war between the disruptors and the incumbents. What I really love about security tokens, and this year in particular, is these guys have started discovering crypto, and these guys have started discovering laws, and they're kind of merging in the middle in this space called STOs, security token offerings. And we're going to have a great panel in just a second of people who can talk very eloquently about these security tokens. What is being built today, right now? The answer is everything, the entire infrastructure, everything from the issuance side, and that's advisory, that's platforms, that's your KYC, things to make your KYC process 10 seconds, 30 seconds rather than 5 days. All of that automation. On the other side, you've got the tools and platforms for the investors, people who are kind of on the buy side. So you've got the issuer side and the buy side, and of course, all the infrastructure in the middle. Do you remember a couple of years ago, people were going to disrupt, they were going to disintermediate, they were going to take away all the third parties. Here are all the third parties. They've come back again, just in a different digital form, hopefully to make things better. And the entire life cycle of securities is being addressed or readdressed. It's not just a case of creating, an ERC20 on Ethereum or whatever and letting it sit there. There's an entire life cycle, entire process that has to be managed by certain parties. Everything from the issuance, creating, defining the token, what can it do, what can't it do, registering the token and with the right authorities to give it kind of legal basis. How are we going to settle this stuff? How are we going to record it? What platform do we use? The securities servicing, which I believe is not discussed enough. So when you have a share, things happen over the lifetime of your securities. You get called to vote in shareholder meetings. Sometimes there are stock splits, there are mergers. All sorts of things happen. You can't just let a token, create a token and leave it there. So I think this is an area, security servicing is an area that's going to improve a lot in the next year or two, because companies are going to start to emerge that deal with this kind of stuff. And of course, the secondary markets, the exchanges which you're familiar with. I'm seeing a few mobile phones go up, so I'll just pause there while you take your photos. Okay, so for those of you who are smiling, I know how old you are. That was 1996. So I'll tell you what I want. Here's what I want. Here's why I think people are rebuilding the entire financial services ecosystem, but with tokens. We want an end-to-end digital experience, everything from onboarding through to the end of the asset, and that's both on the issuer's side and on the investor's side. We want a reduced dependence on specific trusted third parties who have perhaps become in some sort of quasi-monopolistic status, and perhaps they're turning the screws on fees, and we feel that things should be cheaper than they are. We want the benefits of digital, but without the double spend, which is what kind of Bitcoin came along and introduced people to the fact that if you have a digital asset, it's very easy to double spend it. How do we get around that problem? And traditionally, we've got around the double spend by putting an intermediary in the way. So a bank won't let you double spend what's in your bank account. Otherwise, we could just buy loads of stuff. So that's what we want. And what do we feel we'll get if we tokenize things? Better liquidity, 24/7 markets, cheaper, faster settlement, interoperability both between computer systems and between asset classes, delivery versus payment. Perhaps we'll talk on the panel about fractional ownership for big ticket or small ticket items. And finally, automated regulatory compliance. It's so boring, no one wants to do it, so you automate it so it goes away into the background. And that's what the best companies are doing. They're trying to automate this stuff into the background to allow people to remain compliant, but without pestering the users, the issuers, and the investors. Essentially, we're looking for a more delightful investment experience for both the issuers and for the investors. And that's a happy thing. Private markets are probably the best place to start. If you imagine public markets, it's pretty easy now. You have your apps. You can go to your brokerages, your E-Trade or whatever. You can buy a share very pretty quickly. You can sell a share, you can do it multiple times per day. That's pretty efficient. Sure, you have the feeling that you're being charged too much, but the costs are really coming down now. But private markets look like this. This is your asset, right? Today, you get a PDF file, right? And that's it. And you can't do much with that. It's not very liquid. You can't use it as collateral for loans. It just sits there in your drawer for 5, 7 years until the maturity, and then you're like, okay, hopefully I get my money back plus more. Here's what we're trying to do with it. We're trying to move from PDF files and repapering and all the painful processes if you try and sell this stuff to something that's a bit more what you're familiar with cryptocurrencies and actually the public markets. So one's bad and the other one's good. So the good news is you need regulations. The regulatory landscape is changing, and I think that Asia is one of the most exciting places to be for this. And I wrote an article for, to kind of, as part of this conference. It was published on CoinDesk, the State of Security Token Regulations in Asia. You can go and like Google it or CoinDesk it or whatever. I love CoinDesk. I think they're wonderful. They're my favorite coin media. Thanks for inviting me, guys. We also put it on the R3's blog, which is the best blog for enterprise blockchains. So if you want to subscribe to them, coindesk.com or medium.com/inside-R3, and definitely subscribe to the R3 one. Okay, so the highlights of that article that I wrote, I want to talk about 3 specific countries, because you may not have come across these kind of evolutions. Firstly, Thailand. I think Thailand's one of the furthest ahead in terms of the regulations they have put out regarding security tokens and digital assets. They had a decree in May. They differentiated between cryptocurrencies, security tokens, and differentiated between the activities, issuing and exchanging. They've got 4 licenses: digital asset exchange, digital asset broker, digital asset dealer, and even an ICO portal licenses. And that number in brackets is the number of companies that I've identified that actually have those licenses. So they've created the licenses and issued them to parties as well. And I don't think there are that many countries in the world who have this kind of granularity of stuff for security tokens. Closer to home here in Singapore, which is my favorite country, which is why I live here, November last year, they've actually pushed out, the MAS have pushed out a number of guides. This one was quite interesting. They basically said that anything that looks like a capital markets product, securities, falls under the SFA, the Securities and Futures Act. And that includes your issuance and exchange, et cetera. In terms of what they call payment tokens, which is Bitcoin, Ether, maybe some utility coins, there's another act which is actually passed through Parliament but hasn't been switched on yet. It'll be switched on later this year or early next year, and activities related to those types of tokens will fall under that, and there'll be a new set of licenses under that act. So watch out for that. That's coming soon. And finally, I want to call out Hong Kong. They had an early regulatory sandbox for exchanges. They've pushed out some interesting circulars which are worth reading. And they said similar things. So if you're doing a security token offering, sorry guys, that is a security, that falls under the SFO, and you need to get a Type 1 license, which is dealing in securities. For custodial companies, you need if you want to provide custody services, you need a TCSP license, trust or company service provider license. So one thing I do, I look across the regulatory landscape, and a couple of things come to mind. Firstly, like the custody side needs a bit more regulatory work, and that's because everyone understands issuance, everyone understands exchanges, but custody, in crypto, you've got a new thing, which is the ability to self-custody digital assets, which we've never, ever had before. So the regulations actually match what we used to have, and now crypto has come along, and you can hold your own private keys, so the regulations there need work, and I think we'll see that in the next couple of years. And a couple of others to watch in the region is Philippines. They have a free trade zone or a special economic zone called CESA, Cagayan Economic Zone Authority, I think. And Malaysia, they have a similar economic zone called Labuan as well, which is an island off the coast of Borneo. And they're both trying to do crypto things in those economic zones. And they're typically more lightly regulated and outwards facing. So they're ones to watch. But don't get complacent, Asia. Switzerland is coming. We, R3, we're working with the Swiss exchange. We're building a new digital asset exchange, everything, issuance, exchange, custody, and they're doing it on Corda, which is the blockchain platform offered by R3. So that's really great. In terms of timelines there, we're looking at probably Q1 next year, but I don't want to put words in their mouths, but that's kind of my gut feeling at the moment. And that's going to be the full stack, digitized assets all on Corda. I think the main challenges, which we're going to talk about on the panel, 3 things. Ecosystem readiness. Like, it's a big ecosystem. You saw at the front of this presentation all the moving parts. They all need to be ready. They all need to like understand everything. It includes the regulators, it includes technology, it includes the investors, it includes the issuers. So education and then readiness. Regulatory harmonization. So if I issue a security over here, can I list it on an exchange over there? Like, and the regulations are different. And an accredited investor here may not be an accredited investor over there. So how do you deal with that? How can you automate those kind of things into the background? And we need good investors, which I think the panel is going to talk about, and ready investors. So with that, and with 15 seconds left on the clock, I'd like to invite the moderator and our 3 panelists up onto the stage. Come on, guys.
Bring them up. We've got a panel that is eager and ready to go. Anthony, take your seat. That's a tour de force. Thank you very much. Christine Kim is a leading technology author at CoinDesk. She is going to be leading this discussion. We're happy to have her. You know, when you need somebody to do a great job, a cowgirl, a thunderbird, she's all the above. I'll let her explain that over lunch today. We've got Zachary Cefaratti. He has been chasing alpha since the age of 7 when he started investing, and now he is the CEO and founder of Dalma Capital out of Dubai. Sir, yes, sir? Yes, sir. And Philip Pang is with Colliers. And you say, Colliers, real estate, what is their play? He is the leader on real estate tokenization within Colliers, bringing real estate to the STO world. So, Christine Kim, ready for action?
Definitely.
All yours.
Well, thank you everyone so much for joining us. And Anthony, thank you so much for starting off our discussion with such a great presentation. So I want to start off with the end of your presentation, the one point that you said, regulatory harmonization is such a big issue. And so I want to dig deeper into that and kick off the conversation there. What regulatory guidance and infrastructure currently right now do you think is the most disparate and lacking harmonization? What needs to be equalized the most for security token offerings to really take off? Philip, because you come from the more institutional, traditional finance side, do you want to give us your perspective first on this question?
In terms of custodians? Sorry.
In terms of regulatory harmonization.
Registry.
We're a heavily regulated financial institution, so I'm happy to kick this one off if you prefer.
Please do, Zachary.
So yeah, we're a regulated investment bank and asset manager in Dubai and the DIFC. And I think it's important to understand, a lot of people who don't know much about security tokens say, well, are security tokens regulated? And I think it's important that people appreciate that securities offerings are regulated in every jurisdiction globally. And most regulators do not regulate or specify what type of database that a security issuer is using to record transactions or register its members. They do have other regulations around how assets are held, how assets are custodized, finality transactions, so on and so forth, how assets are transacted. And these regulations need to be updated to reflect some of the capabilities that blockchain has, because all of them have been designed based on legacy systems. But I would venture to argue that you can do a security token offering in any jurisdiction in the world in full compliance with the existing securities laws. It's just a little bit of a pain because of the fact that they're based on legacy systems and need updating in order for us to extract the efficiency that we can that blockchain empowers us with.
So let's dig, So let's dig deeper. I sound a little weird, don't I? Anyways, so let's dig deeper into some of that, of what updates need to happen. And Anthony, you had mentioned so many different new guidances from Asian governments all around the Asia Pacific. Do you want to explain a little bit more specifically, what is it that regulators are caring about? If it's not specifically the database, what about blockchain technology? What about security tokens are regulators really focused on and concerned about?
Mm-hmm. Okay, cool. Thank you very much. So although you're absolutely right, they don't specify, whether it's a sheet of paper, whether it's a database, whether they don't specify how you record these things. There are a set of guidelines that have been issued, the PFMIs, which come from the Bank of International Settlement. I'm not going to embarrass myself by trying to say what the PFMI stand for. Principles for Financial Market Infrastructure. Basically, it's a booklet that says, like, whatever you do, your IT systems have to work like this. So they do say, whatever you record it on, you need something like transaction finality, which is basically there's a certain point in time where something was once mine and it's now yours. When did it change hands? And that's really important because companies do go bankrupt. And when a company goes bankrupt, they go bankrupt at a certain time, and you have to know at that particular point in time, did that company own something or not yet, or has it given it away? And some of the public blockchains don't have transaction finality. The proof of work-based public blockchains don't have that. So when I send you some Ether, like if after one confirmation, is it yours yet? Oh no, maybe we'll wait for 2 confirmations. Now is it yours? Oh well, it was a large amount. Let's wait for a few more confirmations.
Yeah.
It's probabilistic, right? There's no point in time where you definitively say that is now mine, that is now not mine.
Yeah.
So things like that. There are, so they do, although they don't tell you what technology to use, they say what the technology has to do.
Yeah.
So that's, I don't know if that answers your
There
question.
are solutions to these problems, though, but they're clunky, unfortunately.
And in terms of harmonization, yes, it's everything. It's to do with defining security. So I don't know, security, something that is a security in, something that isn't a security in the US could be defined as a security in Europe, for example. Right? So is this thing a security or not? Well, it depends on where it is. And you've got all sorts of, because the world's getting more global, you've got where the company who's trying to raise money is based. You've got where you're doing the issuance from. You've got where your investors are from, where your investors live. You've got all of these different aspects to care about and to try and automate away. Because the rules change in different jurisdictions, and we're all trying to do global business.
Those are really interesting nuances to this discussion of the regulatory compliance and harmonization surrounding security token offerings, but I also want to spend some of our discussion talking about those important players to this conversation and the discussion. So outside of governments, there's also different consultancies, different investors, different actors in this security token space that I want to pinpoint. So Philip, do you want to talk about some of the more important players that you see in this space, specifically such as the traditional commercial real estate consultancy in the security tokenization for real estate? Like, what is that? Why do you see it as an important player?
So for us at Colliers, we are very much a traditional real estate consultancy, listed on NASDAQ in Toronto. So we actually service the largest real estate investors, including BlackRock, Blackstone, KKR, etc. These guys won't be the first movers in terms of tokenization. It's more of the mid-cap real estate funds that we are seeing, such as Stan Group in Hong Kong. They're certainly looking to tokenize a portion of their real estate portfolio in Hong Kong this year. On the distribution side, we are speaking to more on the traditional broker-dealers, private banks, and also a large Chinese conglomerate who have a wealth management platform with over 2 million accredited investors already. And the capital is already onshore in Hong Kong. So we're trying to structure deals this way. And the returns these guys are looking is traditional private equity returns, right? 6 to 8% cap rates, etc.
So on that point, I mean, speaking of expectations of returns between more traditional incumbent financial players and, of course, the audience of crypto investors, I'm sure, in the crowd, any thoughts to give on the disparities of expectations on these security token offerings?
Well, if you don't mind, I'd actually just like to address your previous question first, and then I'll get to that, and they dovetail quite nicely. So I believe that, I am biased, we are an investment bank, but we believe that for security tokens to be successful in the next iteration, one of the most important things to, in order for investors to want to invest, there need to be deals that they actually want to invest in. For these things to trade, for there to be a secondary market, for there to be solutions to all these problems that people have, it needs to actually be something that people want to invest in. And if you have a company, if you have an asset that people want to invest in, you don't need to do a security token to raise money. So why would you do a security token? Yeah. There's an adverse selection problem. Unfortunately, we get approached as an investment bank by so many companies that want us to do a security token of their not very high quality assets and think that it's going to be a solution to magically raise them a bunch of money and get a bunch of liquidity. You need good deals in the market. How are you going to attract good deals to the market? quality issuers, the reason that they go to Goldman Sachs, the reason they go to Morgan Stanley, the reason they go to the leading investment banks when they're going to make an offering to either public or private markets is because those investment banks have a balance sheet and they're willing to take risk on the best deals. They are willing to say, we will sell your deal, we will raise you X million or X billion dollars, and if we don't, we will give it to you from our balance sheet, which is actually usually deposit holders' money, which is a whole different kind of thing about moral hazard that we think there's a solution to in blockchain. But either way, we think investment banks who are willing to underwrite, who are willing to take risk like we are, and be the first investor in a deal to guarantee the issuer, why should I do a security token? We're at least going to raise you this much money, and that's going to come from us. We guarantee it. Now there's interest. Now you have an investor. Now you have a lead investor, and you can bring other players to the market. What kind of returns are investors looking for? A lot of people who've been in the crypto market for a while say, you know, security tokens, we've looked at it and nobody's interested in it. Crypto investors want 10x, and if you show them a real estate deal that's going to be making them, you know, 5%, 10%, 15% a year, they're just not interested. But at the same time, all of the people that have been in the crypto space for decades are saying we need mass adoption. We need mass adoption in order for this to
go 10x.
To go 10x, right? To do another 10x, we need.
But hold that thought, Zachary, because I want to know. I mean, coming from your experience, Philip, with BlackRock family offices, is what Zachary is saying? Is it true? Do you think that's what BlackRock and family offices are seeking and wanting from these security token offerings? I mean,
they are.
Yeah?
So with BlackRock, we have been speaking with their in-house innovation teams.
Okay.
They won't be the first movers, but they are looking into this space very closely. Like I said, it's going to be the mid-cap real estate funds, the family offices initially, who would drive this adoption.
Then any innovations you think are in the works right now to address those things like risk, those things like balancing the order books, all these issues that you've just raised, holding the space back from the incumbent institutional investors? What are the innovations happening to address these kind of concerns?
So, I mean, again, going back to, well, investors, the masses do not want 10x. The average person, the average investor, well, everyone wants 10x, but in order to have 10x, you have to, 9 times out of 10, lose 100%, right? And most people aren't willing to take that risk. So most people are more than content to have a stable return and know that they're not going to lose money, right? That's the primary thing for any investor, is they don't want to lose money. So security tokens bring the possibility of investing in real assets where the probability of making a loss is potentially significantly lower.
Is there still reputational risk also with investing in security token offerings? Is that another part of what is holding back the space, you think? Anthony or
Yeah, no, I don't think the reputational risk is in the investor side. It's more like what he does. He's putting together these deals. And I think I'll just paraphrase what you said earlier on. You don't want to put together shitcoin deals. You want like real coin. Like we call them coins, security tokens, but you want to do the legitimate offerings that will make a small amount of money over time without the drawdowns that your customers don't want, right?
Yeah.
So I think the reputational risk actually sits with the intermediaries putting together the deals. The issuers, I mean, they're issuers, so the scams, like, they don't care about their reputation because they're scamming.
Yeah.
Scammers will scam.
But not necessarily. I mean, we're hoping to be doing a security tokenization of one of the top 10 football clubs in the world. We're looking to acquire the club now privately and then tokenize it. So their reputation is their most valuable asset. They have over a million fans, right? And the possibility of fans being able to buy a portion of that club is really exciting and really incredible. But at the same time, there is a huge reputational risk for the club. It needs to be done right.
But that's a really good example, Zachary, because what you were saying about people want to have good assets. It has to have a good underlying product that people are actually interested in. So you had mentioned the example of football club, but what other products and what other markets do you think that investors are most interested in getting into through a security token offering? Tell me about the up and coming products and markets, outside of course, the general like private markets. Like, let's go a little deeper.
I mean, if we're talking about real estate, there's different asset classes.
Okay.
For us, we are looking at more service apartments, co-living type assets which are actually more high yielding compared to traditional resi, right? We're also looking at industrial warehouses, shopping malls. So these are more of the assets which seek higher returns compared to just normal real estate, residential.
I'll add to that.
Yeah.
Passion. Like
Passion?
objects of passion. So football team, that's an object of passion. People love their football team. That's why they support them. They want a piece of it. They want to get involved. They want to get more involved. They're buying all the paraphernalia, whatever.
Yeah.
They want to own some of that. That's a really passionate thing.
Okay.
So if you take that and look at other sectors, perhaps you can imagine the other things, which I think will be really hot. It's stuff where you're not just looking at the numbers, where there's actual emotion behind it. I think they're the ones that will do really well. So an example is beer, right? Some people are passionate about beer and alcohol and things. So there's a company called Brewdog, which is based, I think, in Scotland. They are doing crowdfunding. They're advertising their crowdfunding on their beer cans. So you buy a beer can, it says like, go to brewdog.com/fund or something like that. And they're taking retail money in their next fundraising round. And this is amazing because people like who love drinking beer, who love their beer, can start to own part of that company and they get shareholder perks as well. I don't think they're doing it as tokens, but you can start to see the two worlds kind of collide.
In the real estate market, we manage a real estate investment trust. This is already a way of fractionalizing real estate.
Yeah.
So there's also a question of, well, if you can already fractionalize real estate, if they're already real estate investment trusts, if somebody can already go out and buy a small portion of a big real estate portfolio, then what's the point of security tokens? What's the point of tokenization?
Exactly.
Well, this is actually going back to one of the things that Anthony presented. He showed that private markets are actually probably where we're going to start. And there are some assets, real estate assets, that are very lucrative, they're very interesting opportunities, but that investors cannot invest in through current methods of fractionalization, such as real estate development, greenfield, brownfield developments, assets that are very concentrated. There are a lot of regulations and limitations about what you can do within a REIT, and then there are massive infrastructure costs, right? So our real estate investment trust is very small. It's around 350 million dirhams. It's around $100 million. So actually for us, we haven't even listed it yet. The listing process is too expensive to be justified. It's actually technically what's called a private REIT. The infrastructure behind tokenization is actually much less costly. So the two advantages for tokenization for real estate is it allows you to tokenize smaller assets. You don't need $1 billion portfolio for it to make sense for you to fractionalize it. You can do it with an asset that's a few million or tens of millions of dollars. And you can tokenize assets that come into a completely different risk category and therefore have a different return category for investors, typically higher return.
I mean, REITs, on the other hand, in terms of asset qualification, it's very high barriers.
Yeah.
In terms of location, asset type, and also the yield requirements. And I think REITs also is typically more of a buy and hold investment, as 90% of the annual income is distributed as dividends. Whereas the premise around security tokens, there should be high liquidity, right?
What about differences in custody with real estate investment trusts and security token offerings? Do you want to talk about the nuances in custody there?
So, okay, one of the things Anthony mentioned earlier, and one of the advantages is in the current paradigm, there are a lot of players that have monopoly power and use that monopoly power in order to extract additional rents from a market. So if you're looking at investing in any traditional security, there are only going to be a handful of custodians that you can work with on that market. There's only going to be one exchange in that, or maybe two exchanges, and those exchanges actually have a bit of monopoly power over not just over being a liquidity venue for the trading, but actually maintaining the ledger of the actual transactions. When you tokenize something, you're taking away the monopoly power. Anyone can provide custody. They don't need access to that market. They don't need to have the right custodial and clearing and piping in place. Anyone can provide custody, and you can actually even self-custodize. We actually are big contrarians in terms of the custody business. We looked at setting up a custody business, and we think it's actually going to be a race to the bottom. We don't think it's a very profitable business to invest in. We think it is important, but it's going to become so marginalized that it will become a race to the bottom. People can self-custodize these assets. That's one of the things that makes it so interesting.
Anthony, I can see that your facial expressions there. Do you see any regulatory concerns of what Zachary just said?
No, my facial expressions were just, I was empathizing with my friends who work who are building custodian solutions. So you're absolutely right, but there are some situations where a third party, where you cannot legally self-custody and you need to, because of regulatory reasons, you need to pay a third-party custodian. So Alex, who's standing up, I'll give a shout out, on-chain custodian, he's building a custody business. He thinks your business sucks.
Absolutely, but it's so easy. It's so easy for someone to come in and step in and compete with you, right? All they need to do is have a license, and the marginal cost of custodying an additional dollar of assets is zero, right? It's next to zero. So that's marginal cost leads to determines marginal price. I think these custodians they should be getting paid. I pay less than 10 basis points for custody of assets, where the custodians need a lot more infrastructure than these guys have. I think these guys are eventually going to be getting paid, less than 1 basis point, and they should be. And yes, we will need them, but it's not going to be a very profitable business.
We will need them, and we'll need them in different countries.
Yes.
So they will. It's still
no, we need them. It's just not going to be a very profitable business. I'm sorry. I'm sorry for the guys and I'm sorry to say that, but we invested a lot of money setting up a custody business, because for us, we thought about it and we're like, oh yeah, the market needs custodians, and it's such a small variation in the license that we have for us to add custody. We thought, oh, we might as well do it. And then I thought, we're not going to make any money doing this. Doesn't make any sense.
Well, thank you guys for that discussion on custodianship that I think is a much hotter topic in debate than people really realize. So that's all the time that we have today. Thank you so much, Anthony, Zachary, Philip, for coming on stage with me. And thank you for the audience members and joining us on this panel.
Cool. All right, and thank you to Christine Kim for leading us. Ladies and gentlemen, thank you very much.